Hey YouTube, so this is my next another update video for my stock market vlog. So it's me, it's my account. So I can't remember when I made the last video. I think it was over a week ago. So this is what happened since then. So I can't remember what I said in my last video. But so all of my options on January 19th, so all of those expired, worthless, I think, and yeah. So all those expired, and I don't know why the numbers are all negative. So it's just, I don't know what says -2, because I can't remember if this was a covered call or, because it should be +10, because this is, I know these are longs. These are all long positions, so I don't know why it's a -3, -4. So anyway, so net gain loss is +3,700, so that's my gain loss. And now here's my allocation. So it's down, so market value lower than book value, because BTE is still down. BTE is still down, so it's down 22%. I don't know if I think it will go back up eventually, but it might take a while, because I don't know, because it went down again, so I have no idea what's happening to BTE. Bitfarm, so Bitfarm is also still down, and then so WEED, it's sort of recovered. At least it's only down 20% now, so it's okay. And then FM is almost at break even. That's really good. So right now it's at 12.4. And so IVN has been up, but it's not up as much as it was last week, because I think it went above 15, but now it's down to 14. It's not that big of a deal. So NXE is up. It's almost up to 11. It went above 11 this morning. So, and Tilray. So Tilray is down a little bit. But it's relatively stable. And then so HUT, so obviously, so this is the one that I'm a little bit worried about. So HUT is it's below $10 right now. So so I'm hoping that it will go back up. I don't know if I wanna, like, if I have extra money, I don't know if I would want to buy more of HUT at the dip, because then obviously if it goes back up then I make money, but I'm not sure about that. I don't know if it's gonna go back up. I'm hoping it goes back up, but I'm not sure. So ATZ, so Aritzia has been very interesting because it's up to 37.4, and so it's at 2.3. So yeah, it's been up a lot, which is interesting because I didn't expect this to happen. Obviously I bought the call, so I was kind of expecting that it would go up, but I didn't think it would actually go up. But it's going up, so that's good. And then BTE, so the problem with BTE is so these are the covered calls. They're down because I sold the calls at $2 because BTE was way down. And then these are the long calls, and they're also down because the strike price is $4.50, so it's a problem. I don't know if it's gonna go up to $4.50 because it's at $4 before June. I'm hoping it does. But again, so the book cost is negative, which means that my short positions are worth more than my long positions, and my options, which means that since I earn premium from short positions and I pay premium for long positions, so net the net profit should be $4,000 in the long run. So I'm not too worried about what happens if all of these expire, because I would be up 4,000. BlackBerry is down again. It's going down a lot. So these calls are worth nothing because I bought these calls back when before the earnings report. It was at like $5.75, and then it dropped down to $4.50, and then it keep dropping. So obviously I bought some puts, not a lot of puts, and I'm hoping that it will drop below $3.50. Well, obviously I'm hoping that it'll rise above $5.75, but I don't think that will happen because that's a very significant price change. So I think I'm gonna lose money on these. Then Bitfarm, so these longs are gonna expire for a loss because there's no way it's gonna be at 5.25 because right now it's at 3. And then the shorts they don't expire until March, so there's still over a month and a half. And then WEED, so it's at 650. It's at about 650. So it's nowhere close to 4. So these short positions are not close to making money. Long positions also not close to making money because there's no way it's gonna reach 9 or 10 or 30 anytime soon. Well, these are short positions actually, but these are the non-standard ones that I can't get rid of. So apparently the 30 one is worth $0, but I still can't get rid of it. And then CCA. So yeah, it's a straddle. So it's a long strangle because there's a call and a put, calls and puts, but neither the calls nor the puts are making money because above 58 and it's below 75. I'm not expecting it to go above 75 anytime soon. hoping there's going to be a significant price change eventually. And then Dollarama, so Dollarama's at 100, so obviously the puts are way down. The calls, I don't know, because this is another strangle, so I'm never going to go long positions on options again, unless it's a net credit, you know, it's something to cover it, because it's just, it is basically just, well, the problem with these is that I bought these because I was doing a strangle or a straddle, and then I sold the long position, and then I kept the short. I sold the call, but I kept the put. So, and the call, I should have kept the call because it would have kept making money. So that's the problem with I made some bad decisions because I thought it was going up. I wasn't sure if it was going to keep going up. So that's the thing with a straddle, is that if one leg of the straddle is making money and then you sell it off, then the other leg is just, you know, it's just, it has to make a net profit before you sell either leg. So that was a mistake that I made when I did the straddle, because I was nervous. And so if I was ever to do a straddle or a strangle ever again, I would never sell either leg until the position is a net profit. Because obviously if you sell early, if you exit early, then you do have the profit. You do have the profit immediately, but the problem is that in the long run you lose money on the other leg. So that's something that I won't do ever again. And so FM, so these are all short positions, so they're all net credit, so I don't have to worry about these. FM, the long position, because it's been going up, so the long position is also profiting, but obviously I'm not going to make the mistake of exiting early ever again. So now just hold everything, unless, I don't think there is an unless, you know, I just hold until either expiry or until some other like obvious target. So basically, even though I have the option to exit early, I shouldn't, because if I do exit early, then either I lose money on an opposite position, or I don't make as much money as if I hold. So that's the problem. And then HUT, so the problem here is that the put is for 850 and it has not gone below 850, and so the calls are at 9 and at 8 and 20. Well, this is at 8, this is at 20, so the problem is that HUT the price has been relatively stable, so neither the short positions or the long positions have made money yet. And the put expires in 14 days. So I don't think it's going. I think it's going to expire worthless. Then IVN. So these are all short positions, so it doesn't matter. These are net credit. MRU. So this used to be a straddle, and then I sold the call. So then kept going up, so then I bought another call out of the money because it was cheaper, but the price hasn't changed very much. It's only changed $2, so The put's not making money, the call's not making money. NXE, so price hasn't changed significantly yet. This is at 11. If it goes above 12, then the call is going to be in the money, which is going to be good. Or if it goes below 7, which I don't think is going to happen. And then Suncor, so it was actually at 45, but then it went down to 43 again. But I'm holding it for 2 years, so I'm hoping it will be above 45 eventually. I don't know if Suncor will go significantly above 45, so I think as soon as it goes above break even, then I'm gonna exit, because I don't know, unless there's some really great news for Suncor. And Tilray, so Tilray, so the calls are I don't know who's messaging me. This is embarrassing to check my phone. Okay, sorry about that. Let's see. So Tilray's, what was I saying? What was I saying? So Tilray's strike price is $1, and then for this strike price is $4. So the problem with this put, so this put came from a straddle, because I was doing straddle before earnings, and then I sold the call because it went up, and then the put, so it hasn't gone down much, so I have to hold the put because I don't want to lose money on it. That's the problem. Because the thing is, I don't want to sell anything for a loss, so I just hold it until expiry. But then the problem is that if it expires, then it's worth nothing. So that's the problem. But I don't know if, because as soon as it reaches break even, then I'll sell it, and I won't lose anything. The problem is that I don't know if I can sell it for break even, because it has to go down quite a bit, so I don't really know. So that's the interesting thing about options, is that I don't want to, the problem is that I don't want to exit early and take a loss, so I hold until either break even or expiry. It's tough to make a decision for these, because if I sell early for a loss, then just I don't want to do that. But the thing is, if I wait until expiry in June, and then it's worth 0, then I lose more money. But it's just, that's sort of the hard thing, is deciding what the exit strategy is. And I guess I don't have a clear exit strategy. Yeah, I don't have a clear exit strategy for this, because if I sell now, I lose a little bit of money, but if it expires worthless, then I lose a lot of money. So the question is, do I want to lose a little bit of money now, or a lot of money later? Or maybe break even, or make money? Because I don't know what's going to happen, and I don't know. what the probability of the different outcomes are. So it's just that's sort of the annoying thing. It's just with options. So anyway, so unrealized gain loss is 9,700. ATZ is so Aritzia is up a lot. So obviously I have sort of the same dilemma. Is so do I sell it now? So bid price is 420. So I bought for 390. So I would make 30 per option. So I would make 60. So the question is, do I exit now and make a little bit of money, or do I wait for, you know, to go up more? So that's the question. So it's just so I could say the price target is 40. So if Aritzia crosses 40, it goes above 40, then I exit. That's a very reasonable thing to say. But what if at 40 it keeps going up? That's the question. So I don't know. So that's the main thing about this, is it's not very clear, because I could exit anything at any time. The question is, do I want to do that, or do I want to wait for a bigger payout later? So anyways, all the numbers are very strange, because on that it says 4,200 and on this it says 3,200. So it's very confusing, but so these are the ratings from like financial analysts and what they say. So they say Tilray is a buy, WEED is a hold, and FM is a sell. And yeah. So that's everything on my web broker. Now I'll just sort of explain something else. So the main thing is with HUT is so obviously the controversy over HUT is what exactly happened. So again, I've already showed this, I think, in my last two videos, what happened on December 27th. So this is the question. So obviously I bought somewhere here because I thought it was going to keep going up because it looks like this. But the problem is, I think when the slope is too high, then it I guess there's no way that it can keep this sort of momentum. It could keep rising like this forever. Well, the thing is, I don't know when it's gonna go down, so that's the problem. So I bought somewhere high up here, and then now it's down here. So that's sort of the problem. Is if I look at, so something similar happened a year ago, and then something similar happened 2 years ago. So there's a little bit of a pattern, but it's not very clear. what exactly is happening with HUD. So assuming that it keeps doing this, it should rise back up eventually, because it sort of like rises up and then it crashes and then it rises up and then it crashes. So I think if I hold it for long enough, the price should go back up. I don't think it's going to go back up like this, but I think it should go back up enough so that I make my money back. So then the strategy for something risky like this is called a collar spread, and I'll explain what that is, because I think there's 2 minutes left in the video, so I'm not sure if I have enough time to explain it. But it's something called a collar spread. So if you have a stock that is extremely volatile, like HUT, and then you know, it could go up 50% or it could go down 50%, then what you do is a collar spread, because what you want is for delta to be less than -1, because there's a possibility that you could lose all of your money basically. So you want delta to be less than -1, so that the change in the option price is more than the change in the stock price, because you're holding the underlying stock. So then it looks like this. So I'm already going over my limit, but I think I'll just spend like an extra minute just to do what a collar spread. So a collar spread is you go short a call on the underlying and then long a put. So then combined, so the call has a negative delta, the put has a negative delta, and then the call, let's say it's deep in the money, so then the delta is close to -1, and then the put, let's say it's an out of the money put, so that's a net credit. So then combined, the deltas will be less than, combined the net delta is less than -1. And so on this page it says that the call and the put should both be out of the money, but the problem is that then the delta won't be below -1. You have to do deep in the money for the call, for the delta to be high enough. So, and for it to be a net credit. So that's essentially the idea. So I'm going to end this video here.